welcome to another edition of Nucleus Investment Insights. So wanted to dive into, I guess I've called it NVIDIA's $1 trillion DeepSeek tumble, but it's more about the broader market, I think, in terms of NASDAQ stocks and certainly seeing a pretty big downdraft on Monday. And so I wanted to dig into some of the issues behind that and really just talk about what's changed from a fundamental point of view. Mainly because I think there's a reasonable amount of disinformation out there, and I think that the headline for me is, look, I don't think this is something to panic about. The big picture for me is if you think you're at the AI has done as much as it needs to do, then we've just created this new and then it's got much more efficient. Then yeah, look, it's all over for this. But if you think AI is only just getting started, then then you can come up with a very different view. Anyway, but just to highlight as well that everything you hear today is general advice, not personal advice. If you do want personal advice, make sure you jump onto our website and have a look at what you can and book in a meeting and have a chat to somebody about it. So yeah, with that out of the way, I wanted to jump in and sort of talk through what, less about what's happened. I'm going to assume that most people sort of seen the news and aware that we've got this a company called DeepSeek has come out with a much cheaper model, and it's a Chinese company and a very small company. But I just wanted to dig into some of the issues behind that and some of the things I think is pertinent to telling us what's going on, less about this individual event, but where things can go from here. So first of all, DeepSeek is not one of the big Chinese IT companies. And that's interesting insofar as you've got a lot of companies within that, Baidu, Tencent, Alibaba, a host of others as well, that are all spending big on artificial intelligence in China. And they're all facing the same constraints, and they didn't come up with the same and they're not coming up with similar answers, I suppose, in terms of it being from that perspective. I guess where I'm trying to get to with this is, and I'll use the analogy later on, is that, in 2015, Leicester City, quite a small football club in the English Premier League, won the English Premier League, just spending a fraction of what all the other clubs were doing. Not all the other clubs, what all the large clubs were doing. And then, so, is that proof that a small club can, without having big budget, win the premiership and do better than everyone else? Absolutely. It's proof of that. What it's not proof of, though, is that a small club will always win, because, then you look at the next decade after that and it's large club, mostly Manchester City, but who's outspending everyone. But I think the analogy is very similar in terms of saying, yes, you can have and you can capture this lightning in a bottle, and it's been done before within AI. But it's, is that a sign that everyone else is going to trash their budgets? And to me, that's the answer is no. Everyone else is going to keep spending. DeepSeek, okay, so that's one part, is that it's nothing. It doesn't seem to be something specific about China that's done this. It's more about this company that's done well. The next part is that, look, it was trained on NVIDIA chips. A lot less than OpenAI or Google's or any of the other guys that are doing the training. And DeepSeek themselves have acknowledged that they've been limited by the chip availability, and they'd love to have more computing power to do this. And so a lot of the processes that they came up with to sort of improve this was around the fact that they were limited on chips, and that they needed to optimize a whole bunch of other factors within the process, rather than just throw more computing power at it. They couldn't, and so they had to do a lot of optimization of other processes. And given they're open source and they've it's largely public, the things they've done, those same things are going to get done everywhere else. And so it's, I guess, where I'm trying to get to with this is, there's, in some cases it's pitched as, oh, this is the end of AI. Look what a small person can do. Small company can do this. Therefore, all small companies can do this. Was more, and they can do it without having the latest and greatest chips. And I think the word "without" is the wrong one. It's despite not having the latest greatest chips, but they did spend a lot on that optimization process. They talk about it being $5 million worth of spend versus $100 million for others, and so there's and I don't want to say the company is trying to be misleading in this. I don't think they have been at all. They've been quite clear about what the spend was, where they spent the money, and the numbers that they're talking about that they spend are reasonable within the range. But they're very specific. They've spoken about a small part a small part of what they did in terms of training that model and the training costs. When you look back at the fact, look, this is a hedge fund. It's got tens of millions of dollars of salaries. They spend a lot of time on this whole optimization process and how to do all that. And that there's lots of other factors. Oh, I'm sorry, and this was just a training of one part of the model. It's not taking into account other parts of training in other parts. I think the internet sort of grabbed it. The internet, in inverted commas, has grabbed it and run with this whole narrative about how much cheaper it is. It's certainly cheaper, but it's nowhere near as much as what some of the more fanciful notions you have out there, because just because it's the price we're talking about, the $5 million figure it just doesn't include everything. The other thing is there is a bit of a black market in China for NVIDIA chips, and certainly some of the latest and greatest ones, and maybe they've got some of those, and that was involved in it. And so, in which case, you don't want to sort of own up in public to saying, yes, we ran this on some black market chips. So that's maybe a chance as well. But yeah, it's the net effect, I guess, is that the numbers are much better, but maybe 3 times or 5 times better or something like that. Not like hundreds of times better. Something else that's interesting, if you run through what they've got, and particularly since it's an open source version, you can get sort of cut down versions of this that you can run small enough on for most home PCs, and that sort of goes to some of my thoughts on or to make me at least consider my view on Apple and AI. So my take on Apple was very much that, and I guess phones in general, is that AI is complex. It's only going to get more complex, and the speed at which the complexity increases for AI is going to outstrip the speed at which we get faster and better phones. And so, given I guess where I'm leading to with this is that I think for me it makes a lot more sense that people are going to type in an AI question into their phone, or looking for whatever they're needing in terms of AI on their phone, and that's going to fire off to a web server somewhere that's going to do the calculations and fire it back to them, as opposed to you're going to talk to your phone and your phone's going to do everything locally. So and where does that come from? Is I guess why is this important? Is do we need an upgrade cycle throughout all the Apple phones and Android phones? And that's partly what drives Apple is, if there's new features coming out that people have to have, then that sort of drives a wave of buying. Now, I think they're certainly going to do marketing on it, is that their marketing is going to be that, here's a new phone and it's AI ready and all that type of stuff like that. And maybe that'll work. But I think from a fundamentals point of view, I think not that much of the AI processing will get done on the phones. Given that, this has got quite a small version of it, maybe there's going to be more on the phones than I might have thought. And maybe there will be you might be able to have some pre-trained models sitting on your phone that maybe do part of the work, maybe just in terms of, the language processing and maybe a few other bits it could do locally. So that might be that was certainly interesting from my point of view. I think the other big thing to remember is that this is not a revolutionary change with a completely different version of calculation. This is about optimizing existing processes. So largely what you had was Google came out with a paper who sort of underlined all the sort of 5 or 6 years ago at least, that underlined the sort of key principles behind this and how it all fit together. OpenAI then grabbed those same concepts and effectively did very similar to what DeepSeek has done. They created them a version of that was cheaper and faster to run, and all these things like that sort of launched them into it. A couple of years later, Anthropic effectively did something similar, where they managed to sort of catch up as well, and they became that for anyone that's a Claude version that's out there. And then we've seen DeepSeek come through and do it again. So they're sort of largely the same models though, and so the types of calculations that are done are not radically different. And I think OpenAI is talking about whether DeepSeek is infringing on some of the things they've done. But I think the issue there is that OpenAI effectively took Google stuff, and so it's sort of a little bit the pot calling the kettle black. But it is a sign that we're into the early stages, and you can and we can certainly see more of these models pop up over time. Keeping in mind though, and this is probably one of the issues for who benefits from this and who doesn't benefit, is the idea that you can have these models pop up and people would suddenly a deep insight into how these models might be further optimized. That sort of lets them jump ahead of the competitors. That's going to keep coming for the next few years. It is going to be progressively harder. It would be much easier to get one of those insights a year ago, 2 years ago, than what it's going to be in 5 years' time, because there's just going to be that much more driven into this. But keep in mind as well that DeepSeek, it's a hedge fund that runs off AI strategies. They're going to have millions of dollars invested in, and probably tens of millions of dollars invested in staff. So it's not sort of a backyard. Yeah, somebody knocked this up on their home PC and look how good it is. There's genuine other costs there. So not to say that you can't find in other companies, but there is that. I'm quite aware, and I think for investors, to be quite aware that whether it's OpenAI, whether it's Google, whether it's Meta, their version, or DeepSeek, the leadership's going to change, and the switching costs are pretty low. There's a lot of different technologies coming out now, or a lot of different software that you can use. And within that software, quite typically, you literally have the choice of which one you want to use. So, if you're using a programming agent, where it sort of goes and I guess agent is the idea that it's not just one query. You're going to send out multiple queries. You're going to send out a query, get the answer. You might need to double check it, or you might need to run that code and test whether it works and debug it. So these agents are doing that sort of back and forth part. Quite often, the software which enables these agents, has just a drop down. Do you want to use OpenAI? Do I want to use Claude? Do I want to use the Google version? Whatever it is. And so the switching cost is pretty low, and that's why it's going to be quite hard for these companies, certainly for the next couple of years, to really charge higher amounts and make massive profits on this. So that's that. It is open source. That was another interesting factor. So, or largely open source, not fully, but mostly open source, which is sort of good. It is good. And I think the main thing I wanted to say about the open source is there's different software models that are out there, and one of them is the sort of Microsoft software, so to speak. It's proprietary software. You buy it, you're relying on them to update it, and it's sort of it's a product and service sort of mixed up into one. And then there's another model out there, and there's lots of software on this, and this has certainly been growing over the last sort of 10 years or so, where you've got things like Linux or Python as a programming language, or a bunch of different databases, maybe MySQL or Postgres. And effectively what it is it's open source software. There's a whole team of various people around the world who all contribute to this. Most of them are heavily involved in whether it's the programming side or the database side. And that software is free. But then what happens is the companies then charge to implement that software and for the service part of it. So the product part is largely free, and the service part is the part that's paid for. Now, within AI, you know, of the large ones that's doing it, OpenAI started open, but are now a much more of a private model. Google's sort of running very much they've got parts that are open, but a lot of it's private models. Anthropic's similar, and so the question is, will we end up with more of a open source version where it's actually not about the product anywhere near as much? It's, you know, there's like one globally, or maybe not one, but, you know, there's like 3 or 4 globally trained models, and then they're sort of largely done on an open source basis, and then it's just the applications of that. How does it actually get applied, and what are the factors go into that? So that's maybe where it'll head. You know, we're in very early stages, so too hard to tell. But I guess it's one note about saying, look, do I want to take a massive bet on? So you know, not that any of these are really listed at the moment, but let's say you got a chance to buy OpenAI directly into the company as part of the private listing or something like that. Is, look, do you know, how much do you want to bet on that there's going to be one winner and it's going to be them, and that it's not going to be an open source solution? That's the part where at the moment I think it's too early to tell. Okay, so that's just some of the big picture issues. The other one I want to highlight is, and this is probably the more important one, for what does this mean for companies involved, particularly companies like NVIDIA. And I have a chart just up showing this from a little while ago. Well, when I say a little while ago, you know, a couple of months ago, I guess, which is a big time difference in terms of AI. But what it's showing is the cost per task on different versions of OpenAI. So this O1 Mini, and versus the score that it got on this private evaluation testing. And so you start with these ones that are like run at a fraction. Each query is like a few cents or whatever, and it's this fraction of a cost, and it gets this low result sort of down in the left-hand corner of this chart. And then you spend a bit more, so a bit over $1 for a task, and now you can sort of double the score you're getting. And then you've got these other versions of low, medium, and high. And actually, sorry, I just want to highlight as well, this graph is on an exponential basis. So it follows up. And if on the far right, and for anyone listening in here, it's coming out of the cost per task of over $1,000, and it's 0.3, and it's got a high tuned. So they've actually a model that's been optimized for the task that it's trying to do. And so there's this idea that what it's doing, what we're looking at here is we're looking at, do you want a cheap model that gives that can be quite good at a number of sort of simple tasks, and you can run very cheaply, up to a quite expensive one that scores really, really well, but is quite expensive in terms of running each task. And that's sort of a path from I said 3 or 4 months ago. Now, with the introduction of what DeepSeek's really doing is shifting this entire curve back to the left, and quite substantially, so that you can probably one notch might be, you might be able to bring it back to sort of factor of say 5 from where you are at the moment. And so that's going to be, and that's, I guess that's where I'm trying to get to, is that they haven't done something revolutionary in terms of created artificial general intelligence that can now do all this stuff and it's all cheap and everything like that. What they've done is change the cost curve, and it's in a way that others can copy it. But the important part is it's not something significantly different to what's already being done. I think is probably the key part to get out of that. And so okay, so what does that mean? Actually, I'm going to jump back and with some description for what that means just after this quick message.
We'll be back with the investment insights very shortly. Nucleus Wealth is an active and passive investment manager. If you like what you're hearing and want some help with your investing, we can do it for you via our active portfolios. Our tactical and core portfolios use the insights shared in this podcast to construct and manage your investment. We blend tactical portfolios to offer our combinations of international shares, Australian shares, government bonds, and cash. We vary the asset allocation with the goal of protecting your capital in times of market uncertainty. We also have active international and Australian share portfolios. These are chosen using our quality and value investment philosophy. You can find out more at nucleuswealth.com. Now back to the show.
Right. So actually, one more thing before I jump into what it means. The other one I just want to show quickly as well is this is titled Anthropic and Google. It's actually DeepSeek and Google. Google came out with this Gemini 2, and it looks really good. And just wanted to highlight that it's relative to DeepSeek. It's actually cheaper and better results and better context length and all these things like that. So not to and I feel like they've had this happen to them a couple of times. Google is that as they release something, a new version that's quite good, often they get trumped by other announcements that are out there. And so they've got this Google Gemini Flash thinking. And so if you look at I've just got up on screen, I've got this just a quick table, and it's showing there that their cost, the input token cost is 7 cents versus DeepSeek's 55 cents, and then outputs are 30 cents versus $2.19. So and then all the different scores that it sort of tends to beat on DeepSeek on all of them except for one. So yes, sorry, so that was one other thing. So we're getting back to the question of what does this mean for AI spending? And this is the part where, like, I've seen various things saying, "Oh, this is the end for AI spending." It's got so much better. And the thing I guess I'd posit to you is that, say you're the CEO of Amazon Web Services, and you're sitting there and you go, right, we're running this, we're rolling out these data centers. We're building data centers all the time. We're rolling them out. We're putting chips into them, and we can't build them fast enough. And now all of a sudden, let's use a more extreme version. Let's say it's 10 times or 100 times more efficient. Does that mean that as a CEO, you're like, okay, it's 10 times more efficient. I've just saved myself 90% on costs. Great. I'm going to spend exactly the same amount, or I'm going to cut my costs by 90%. I'll only need to spend 10% of my prior budget because I can get exactly what I was going to get, what I thought I was going to get, and only spend 10% of the budget. And I'd go, well, no. What you're going to do is you're going to look at that curve I showed just a minute ago, showing that the more data you throw, the more processing power you throw at these things, the better the output. Is you're going to say, well, great, I'm going to spend the same amount of money and just get a much better output for the same amount of money spent. And I think that's the key, is that if we're at the stage where AI has done all it can do and everything's won, then yes, improvements like this are going to mean that nobody needs to spend as much money. And the other analogy I had that I'll come back to again is this idea of ADSL, which sort of came out in the tech boom, and that pre 2000, we're sitting there in this period where it's mostly copper wires up and down, and fibers starting to be rolled out everywhere, and when you just can't get enough speed from copper wires that everyone wanted. And then somebody came up with this sort of genius software programming thing, which is basically saying, well, the internet is not like a phone call. A phone call, it's basically two-way, and so I need same up and same down. But the internet's very different. People just need to often just send little clicks up, not very much, and then suck down a lot of data from there. And so we don't need to run it same bandwidth up as down. We can basically cut the bandwidth and have a very small amount for the up and lots coming down. And so over exactly the same hardware, we get like 10 times better results. And that was a bit of a game changer. But nobody stopped. None of the tech companies at the time stopped their fiber rollout or stopped trying to get more bandwidth, because the reality was even with those changes, you didn't have enough bandwidth to run a Netflix or run streaming videos or whatever it is that you wanted to run on the internet. You're in that early stages where we just needed more data as much as possible. And yes, it's great. We had this fantastic software solution that gave us much better, much better bandwidth, but it still wasn't enough. And so the spending that went on just became more productive. And to me, this is exactly the same type of change. It just makes all of the existing ones more productive, gives better results for the same amount of computing power. All these other factors. It's an optimization. It's not sort of the final win for AI. One of the things as well, DeepSeek has been running sort of largely free. They do have some costs for sort of third parties, but they're cheap within that. I guess there is a sort of thought around this is, look, would say the Chinese government decide that it would like to subsidize everyone's AI queries and run it very cheaply, and in order to pick up the data. And there is potential within that. That's probably the biggest bear case for companies like Google or Amazon, is that all of a sudden the Chinese government decides, sort of similar to what it did in solar panels, is that no, they want to manufacture most of the solar panels in the world, and so they're going to subsidize solar panels in China and put everyone else out of business. Now, could they try and do something like that on AI? Yeah, absolutely, they could try. Given the way TikTok went, I would say that most countries would be against that, and I guess China's safeguards over data and everything like that's going to run into a lot of problems. But it is potential out there that you'll have a very cheap competitor in terms of a Chinese. Basically, if you're happy to give your data to China, then they're happy to do it very cheap. Is a potential, and that could be damaging to some of the bigger data center providers. What else have we got on that? Okay, so let's get back to the real core question though, and for NVIDIA. So coming back to the title of the slide, is the question for them really is, are companies going to keep building data centers? And if they're building data centers, what are the constraints over that? And will they build data centers and not put NVIDIA chips in there? Will they put the cheaper versions of other chips in there rather than the best ones? So for me, I guess the short answer is no for me. And I'll give you the reasoning why. I might be wrong on this, but we'll find out over the next sort of 6 to 12 months whether people are starting to change what they're doing. But in a broad sense, if you want to build a new data center, in a broad sense, there's not enough data centers out there at the moment, and there is a massive rollout globally of new data centers. The biggest constraint at the moment tends to be power within data centers, and takes a while to get up and running. You sort of 2 or 3 years to make sure you've got the right power. Given that the data centers that are being built are bigger and bigger, and they're pulling in enough power that you need to. It's not sort of a matter of saying, well, 30 years ago you're setting up a data center, or 20 years ago you plop it somewhere in a suburb. You're sort of drawing similar-ish type power to if there had been a factory. If you're replacing a factory, you're probably not significantly different in the amount of power you're drawing. And so you didn't need to go back to sort of grid operators or make sure you had the right supply. That's different now. The size of the data centers that are being built are big enough, and they're building they're certainly trying to future-proof them and build them for this new way of doing calculations using mainly GPUs that requires a lot more power. So that's one part, is the power part. And so you're in a sort of 2 to 3 year time frame where you're waiting for that to get all set up. The data center build itself is sort of that 12 to 18 months it's not that complex, but it's not that complex from an overall, there's a lot of repeated work within it. Like, okay, it's a big room, it needs cooling, it needs power, it needs, all the factors that go into it. It needs a bunch of racks and everything like that. It's going, here's this, what you're doing in this 1 square meter, go and do it another 1,000 times. And so, but that just takes time, and you're constrained by the staff really that can do that, and physical limitations on that. So that's your next one. Then you're looking at your sort of all your networking and your GPUs and all the semiconductor stuff, and that sort of needs maybe about a 12-month lead time on that, maybe a bit less in some areas, a little bit more in others. But if you're putting a data center together, that's where your bottlenecks are at the moment. Is power first, the data center and doing all the building and all that type of stuff second, and then last of all is this idea of getting your semis up and running. So I guess the question is, if let's say you're planning to build 20 data centers and put the latest and greatest NVIDIA chips into each one of them as you're going, is that if that's your plan, would you prefer to instead build 30 data centers and put not the leading edge NVIDIA chips into it anymore? Put sort of either lagging NVIDIA chips similar to what DeepSeek used, or other sort of lesser chips from elsewhere. Is that what you'd prefer to do? And my impression is that, and look, we're 1 week into this, so maybe this will be shown to be wrong as well. There's going to be decisions made out there by the operators. But my discussions with various places and experts in this field suggest that no, people are still going to opt for. I'd much prefer to run 20 data centers with the latest and greatest and optimize that than have to worry about getting the power for another different 10 data centers and the permitting and setting them all up and running and having staff in different locations and all that type of stuff like that. I'd prefer to have the data centers around the latest and greatest. And if that's the case, then that's NVIDIA that sort of comes through on that part. So that's your sort of real $1 trillion question for NVIDIA. Is it goes down the other path that people are like, no, I'm just going to build more data centers with less power and the smaller footprints and just run way more of them, then that's sort of a bad thing for NVIDIA if that's the way things start to go. Too early to tell, but one to keep an eye on. And the other thing I guess to note as well, I guess it's a little bit of a side note. What I'm really watching for in the NVIDIA space, Google has some of its own chips, and Amazon does as well. But Google's sort of a fair bit ahead of the game in terms of how they've been running their data centers and managing the chips and cooling and all these other things like that. So I guess I've got, so that's where my main concern, I guess, in terms of NVIDIA is that, will Google and possibly Amazon as well come up with competitor chips that might not be quite as fast or quite as good, but actually sit better in the whole ecosystem that they're building. And so that's where they switch. At the moment, that's not the case. But yeah, that's a bit of a bigger concern to me than something like DeepSeek, I guess, in terms of what happens with these data centers. How do we tell for data centers? What are we watching to see that it slows down? Well, one of the things that's interesting is you can get some sort of feel for some of these companies. Say, if you're looking at companies like GE Verona, which is General Electric, a spin out of General Electric that sort of focuses on power systems. So that's one where you're looking at their sort of what their future is in terms of projects coming through. You can also look at various different companies. Sterling Infrastructure is one. I'll pop up one of the charts. Not really. This one's just their pipeline, which is they do have other things that they do, but the companies like that where their main the biggest division they have and the fastest growth they have is doing all the prep work for data centers. So digging up all the dirt and putting in the foundations and you're connecting up the power and water and all the other facilities to it. They're sort of that's the type of company that's worth having a think about in terms of watching and things we're sort of watching to see when does the end of this come. We're 1 week into this announcement, so there's no new news. But as of last time we heard from these guys a couple of months ago, there's no slowing in that area, and things are if anything speeding up. So yeah, there's no. You should get a decent look at some of those companies to say, okay, yeah, our backlog's slowing down, or our growth rate of sales and everything like that is slowing down, and that gives you like a 12-month or outlook or 18-month outlook onto what's going to be happening to NVIDIA chips over that time frame. And so nothing really particularly slowing in that area at the moment. What else did I have? I wanted to talk about this. Switch. Yeah, spoke a little bit about switching costs. Oh, look, training and inference costs. I mean, that's the other big one. We ran this chart, and I wrote a whole piece about this, about the OpenAI O1 model. And so the big difference between that model and what we saw in some of the previous ones is that there was a lot of spend in most AI solutions, these large language models, on pre-training and post-training, at very little cost in terms of the actual queries that people are asking, or what's called the inference part. So if you think about that as I suck in the whole internet and I use that to create my model, and that uses up 60 odd percent, say 60, 70% of the cost of that. Then I go and spend 20 or 30% more on, once that model's up and running, doing post-training, going, okay, I got this result. Was it the right result? All that type of stuff. And then the final part, which is now that's out there, and Damien's gone in there and typed the question and asked it. That's such a minor cost overall of the overall factor. These models that are running sort of model of models, so to speak, where it's going out and still running more. I'm putting the queries in, it's checking it, it's running some more optimization and some more things in terms of the inference. The cost is a lot higher for the inference, and potentially that might mean NVIDIA chips might not be the best result for that inference part. There might be more specialist chips that come out. And so, yeah, so when we're looking at this, where's the money going to be spent? That's sort of a key factor. And keeping in mind, these are all these trends. We're looking at these tiny trends. We've got like a couple of small years, and we're trying to say, how's this going to look in 10 years' time? So you need to take all this with a big grain of salt. But the other big threat to NVIDIA is, will inference all of a sudden become much more important in terms of the scheme of things? And that's the way things were moving. DeepSeek takes a bit of a jump back to saying, well, actually, it doesn't need as much of the inference. The inference costs are actually much lower. And so it's a step back away from needing lots of more inference chips, which is actually probably more positive for NVIDIA, because if you're going to spend all your money on pre-training and post-training, that's where the NVIDIA chips are the best. And so that's sort of the immediate reaction. Having said that, my suspicion is that where AI looks to be moving is more on the inference spend, in which case it'll turn into more of a service, and you'll end up with what we saw on that cost curve from a little bit earlier, which is, do you want to spend a lot of money and get a result that's much more accurate, or do you want this thing for free and have something that's sort of accurate for simple stuff, but might not be the right accuracy for more complex answers? And I think that's going to, that will come back to the use case and where it goes. Okay, so that's where we are. Fallout for companies. I spoke a little bit about Apple already, and actually let me just jump into one more quick message before we come back to the fallout for companies.
We'll be back again shortly. If you like what you're hearing but want a low-cost passive option, Nucleus Wealth is the first to offer passive direct indexing in Australia. The first generation of passive investing was index funds. The next gen was ETFs. Now direct indexing is here with significantly more customization and control. The benefit of direct indexing is you can add or subtract investment themes, and we have almost 100 different options to choose from. For example, you could buy an international share direct index portfolio that excludes fossil fuels and arms manufacturers and has a tilt towards cybersecurity and cloud computing. Alternatively, you could buy a portfolio with no screens and an extra exposure to nuclear power and defense contractors. You can find out more at nucleuswealth.com. Now back to the show.
So actually, well, I might jump into a few of the questions we've had come through as well, because I think there's some important features within this that very much relates to companies. So Samuel's just asking, or just noting that OpenAI was already losing money on their Pro subscription and what they're spending, and I do note that that's I think within this sector, all these guys are happy to spend and lose money for the next few years, in terms of saying, if I spend and lose money for the next 5 years, but then there's we're down to versions of AI where it's complex enough, there's only 3 or 4 of us left, and so I get somewhere between 40 or 50% of the market and 10% of the market, then that's worth losing money over the next few years. I do think that's the case with all these, regardless. But these next more important is DeepSeek calls into question the moat for the big tech sector. Now, this is a part, I guess, I have some issues over. It might call into the moat for the AI side. It certainly calls into it in terms of saying, okay, you've got these models running. Maybe the moat's not as big as what you think it was, and that's a concern for Google or Alphabet. It does, it is an issue that they were the leaders in this, and now there's and then OpenAI popped up with having spent a lot less than Google, and sort of piggybacking on a lot of what Google had done, and sort of leapt forward in front of them. Then we saw Anthropic effectively do the same thing. A very small company that came up with Claude and a number of others, and they've been sort of bought out since then. And so that was that's certainly another one. And now here's another one popping along, DeepSeek. So that's your 4 bigger ones, plus the Meta version of it, which is an open source. That's Llama, which is not used as much at the moment. So they're sort of Llama sort of looked upon as a bit behind. So is there a big moat in this area? No, but I do think the moat's getting bigger with every year that goes past, because the more complex this gets, the more you're going to need. The more you're going to need to have bigger teams and the processes behind it. But it is but the moat for the moment is probably as narrow as it's going to be. I think the moat will get bigger as time goes on. So is there a wide moat? No, there's not within that space. And I think that should be concerning for you. Having said that, though, if you're looking at, say, the more profitable part of this, which is a lot of the data center side and doing the data, doing the calculations, that part has got a very big moat. And the very big moat, well, on a number of different factors. One is that the sheer capital that you need to put into this is just growing exponentially. It used to be, for $5-10 million, you could set yourself up well, actually not even that. Back in the early days of the internet, for a few $1,000s, you could set yourself up as an ISP. And then, as time went on, it got more and more complicated, and then we got these data centers setting up, and $5-10 million to set you up a data center, and now we're talking about hundreds of billions of dollars for setting up these. It's a scale thing, and that part, Microsoft, Google, AWS, or Amazon have all got lots of scale. Plus, they've got all the experience of doing it. That is a hard part of the market to break into, and I do think they've got a wide moat within that area. Google search, you do need to be a bit more, I guess, circumspect about search. They've been far and away the search leader for so long that you've got to have some concerns over the moat that Google has in terms of search, and the fact that we're still in the stage of new people popping up. I do think DeepSeek, part of the issue for DeepSeek was the fact that it was Chinese was probably as much of a shock to as anyone, because Anthropic was pretty similar sort of a year or two ago when they popped up, as a small company with some doing it on a relatively low budget as well. So Alphabet, let me scale up from the other side. Amazon, I don't think there's a lot to worry about at all. It's actually that things have become more effective, and so people are probably more likely to spend more money. your one risk there, or your big risk, or one risk, your big risk there for Amazon is that if China decides, you know what, we're just going to provide data for free and calculations for free to people. Yeah, it might not be as fast, it won't be as good, but we'll just do it because we want to suck in the world's data. And you don't get any sort of pushback from governments in terms of cutting that off. In terms of Alphabet, it's the one part of their business, the data center part. No, I think they're in the same boat as Amazon. The other part, the search part, that's where you've got to have some concerns over that. Meta sort of went up as part of this came through, which is sort of interesting in a couple of ways. One is that it's showing that people don't really care about Meta's AI. I think people look upon Meta as being a consumer of AI, less than a producer, so to speak. So having AI on all their different platforms, with this became cheaper. And so if they've got their Facebook and Instagram and all these other things using AI, then maybe this is just showing that they'll actually get better bang for their buck in terms of that. And so, so I don't think so Meta is despite the fact that their own model is, and then all the money they're thrown at it's been shown up, I think there's probably probably a net positive for them. Microsoft is sort of similar to Amazon. Their investment in OpenAI, is a bit less valuable, but they are integrating a lot of that into, and a lot of the Copilot stuff, they're integrating it in. I don't think there would be a major switching cost if they had to. I do think they will try and stick with OpenAI as much as they can, but push came to shove and OpenAI fell miles behind everyone. I don't think there's a major cost, given that Microsoft's setting it up as Copilot. If they just change the back end to somebody else, I don't think is a major issue. So so slight negative for Microsoft, but positive on the data side anyway. And then NVIDIA, obviously the most important of those. It's probably spoken enough about that one. I guess the thing for me is that keeping in mind the price fall we saw again last night. So big down on Monday, big up on Tuesday, but still down 20%, up sort of 7 to 10 on the next day, and then down again last night. Now last night was less about DeepSeek, was more about renewed talk on cutting down chips to China. So basically what has happened there is NVIDIA has taken the constricts, the rules that the Biden administration said they were going to impose, and they've designed a chip around it that's basically the best possible chip but then it fits within the export parameters. And now there's discussion that maybe they're going to tighten the export parameters again, and that those chips will need to be redesigned, and they won't sell as much in China. So that was more of the weakness there. And that speaks a little bit to those geopolitical concerns that Ant is asking about. We've also got some questions about. Actually, might skip those other ones. I think I've dealt with the other questions in the podcast so far. So the question now for all these stocks is, what's in the price and what's not in the price. I think for NVIDIA, if you look at the forward numbers, is sort of trading on about 28 times next year's earnings and about 22 times the year after. That's about a 25% premium to the market. So if you looked at the world market let's say for the second year of earnings, they're trading about a 25% premium to the world market. Now they're in a nasty industry. It is an area where you don't want to pay top dollar for these companies if they're not growing. So in sort of a steady state, if you look at Intel's and Texas Instruments and all the whole raft of semiconductor companies that have been winners in the past and are no longer the preeminent stocks within their sector, they tend to trade on about a 20%, at least about a 20% discount to the market, maybe a little bit more. And so if you look at NVIDIA and you say, okay, at some point in the future, they'll go to a steady state. And at that point, I want to pay a 20% discount or a 30% discount to the market, say. What's priced into the stock at the moment? How many years of good growth is priced in? And I would say that you're really only looking at 3 or 4 years of good growth that's priced into the stock at the moment before you assume it goes back to a sort of a steady state profitability. Whereas, I would argue that there's at least 5 years, and you can go before people are starting to catch up in any meaningful way, and maybe as much as 10 years before you really come, where you get to grow at those rates, just because there is this big demand for data centers coming on. And so, so it doesn't look particularly expensive on that basis if you're looking at those stocks. Within the other, Meta and Alphabet are basically trading. Let's say I'm going to look at second year earnings, because I do think the market is very focused on that year out earnings at the moment, especially for these stocks. Is that Alphabet's on 19 times, Meta's on 23 times, and if you strip out some of the spend Meta's doing on their metaverse, if you strip out that, which is not making any money, if you strip out the negatives on some of that and just look at the profitable part of it, then they're sort of on that, probably pretty similar to that 19 times or a little bit below what you're seeing from Google. It's just not a big change, but not a big premium to the market. It's roughly in line with what the market is. A little bit more on Microsoft, you're sort of 26 times, so you're trading a fair bit above, so maybe 50% above what the market is. But they're a bit of a metronome in terms of their profitability, and earnings just keeps growing strongly. So it's hard to bet against on the Microsoft front as well. So Apple I've got more concerns over. I think Apple's sort of priced on 27 times. And that's probably where you've got a reasonable amount of risk, and within that, and that comes back to what we spoke about right at the start. Will these AI drive more in the way of phones? Are people going to need phones for AI, a new version of the phone, and they get an upgrade cycle? My suspicion is not, but do they manage to market it that way? And the answer is probably yes. So. Anyway, but do I want to pay that much for it, given that you could buy Apple on a discount to the market, a couple of years ago? And then Tesla's your other one. Look, they're sort of on trade, priced on 100 times. They came out with their results. Sales sort of went backwards for the first time in forever. Talk about a lot of growth and what they're going to do. I think the thing for them is they've taken a very big bet. And a very different bet to others in terms of the AI and how to run it, how the models will work. I think you'll find that. Well, I don't think their bet's going to work, but if it does work, it's probably already priced into the share price. And so I do think there's a double downside risk within them, is that they're taking a big bet on the method, on the way they've used AI within their business, which may or may not work. And they've also, but the share price is pricing it as if it does work, and it does work very well. And so, if it just merely works, I think there's downside to the share price. And if it doesn't work, then there's massive downside to the share price. But he's on Elon's Trump's best mate at the moment, and so hard to bet against. It's certainly not a stock I'm sort of interested in owning for the longer term, and it's not in any of our sort of major portfolios. Anyway, that's pretty much it. I think it is worth noting, the markets have been on a tear. I do think they're looking for a reason to have a bit of a pullback, but DeepSeek on its own seems to be overhyped in terms of the negatives, and it certainly to me doesn't seem to be an AI boom ending event. It actually looks like an increase in productivity, which will then mean that people should be spending more money on this. And so, keep going back to some of those analogies I spoke about earlier. First of all, Leicester City, winning as a minnow, winning the English Premier League, spending 10% of everyone else. Yes, it can happen, and it may well again happen within the AI space. But there's the other guys are spending a lot of money, and they're going to end up with pretty good results. I think it's very similar. It goes back to the big clubs winning after that. And then the other one, that whole idea around ADSL is that, if we're constrained by the amount of data in the data centers that we need, becoming more productive is very helpful, and we need some more of these breakthroughs to keep making AI productive. But it doesn't mean that we're finished. AI is over. It's nobody needs to spend any more money and it's job done. I think there's still lots of money coming through for these guys for years to come. With all that said, just want to highlight that you can get Nucleus information from nucleuswealth.com/content. You can listen in to our podcasts on all major and minor podcast platforms. If you've got any thoughts or comments, I'd love to see them. There's actually, sorry, before I go as well, let me just jump back. I've had a few late questions that I missed, and you can get us on all the different social media ones. Sorry, I should hit up these questions before I go. Question about, will NVIDIA begin to rotate out of some of the ETFs now? No, it won't. Very unlikely to. The issue with exchange traded funds, the way they work is, let's say you're buying an S&P 500 fund, is that they will own. So at the start of the week they owned 8% NVIDIA. Now the share price fell by 20%. They owned 8%. The value of their shares fell by 20%. They didn't need to do anything. They didn't need to do any extra trades. Where you start getting, where the big movements for ETFs are, is where stocks start coming into them. So that it's a zero weight, and then all of a sudden it comes into the big weight. That's where NVIDIA dropping into indexes, and it's already in every index. So I don't think there is much to go in terms of ETFs at the moment. And then questions about rate cut predictions. I'm actually going to put you forward to one of our next ones. We're going to talk about some interest rates in the next couple of weeks, but I will highlight that our views are that the Fed is certainly facing a stronger economy than what I expected, and the Aussie is facing a weaker economy than expected. And so we do think the relativity for there is more likely on the Australian side for rate cuts, less likely in the US. Anyway, I will leave it all at that. Thanks for tuning in. I'll see you guys, everyone, next Thursday, 12:30. Thanks.